You know that highly specific, deeply frustrating feeling of just staring at a candlestick chart and realizing you entirely missed the boat?
Well, we have all been there. It is brutal.
Right. You look at the early days of Bitcoin or Ethereum or, Solana, and the hindsight bias just immediately kicks in.
You start thinking, well, if I had just understood the underlying mechanics back then, things would be very different right now.
Exactly. But at the time, it just looked like noise. It looked like this crowded, chaotic room that you just didn't have the key to.
And I mean, it is the defining financial regret of the modern era. We watch these massive structural wealth transfers happen in real time, almost entirely from the sideline.
Yeah, completely from the outside looking in.
Because by the time the utility of a network is obvious to everyone, by the time your neighbor is talking about it at a barbecue, the barrier to entry is already astronomically high.
The ship has sailed.
Exactly. The underlying assets have matured, the network effects are priced in, and the rest of us are left buying at the top, basically fighting for scraps of those initial percentage returns.
Which brings us to the core mission of today's deep dive. We are unpacking a really comprehensive blueprint from the Normie Crypto Network.
Specifically looking at their MemeLinked ecosystem.
Right, MemeLinked and their native MK token. The thesis they are putting forward here isn't about, trying to time the market on established giants.
No, they are charting out a transition away from traditional siloed financial
Well,
systems.
yeah, moving toward a borderless, digital-first economy. And their claim is that the real opportunity lies in fundamentally changing how everyday users interact with the protocol when it's, still in its infancy.
The distinction they are making in this documentation is so critical to understand. The real explosion of value in any decentralized technology. It doesn't happen when it is an obscure cryptographic experiment limited to a few developers.
Right.
The tectonic shift happens when the infrastructure finally scales to support everyday consumer behavior, when the friction basically drops to zero and the mainstream arrives.
When the so-called normies actually start using the rails without even realizing they are using blockchain,
Precisely.
that is the entire ethos of this stack. They're outlining a framework where everyday people are giving the infrastructure to actively build this digital-first economy, rather than just throwing liquidity at a decentralized exchange and crossing their fingers.
And that passive approach is exactly what has burned so many retail participants over the years.
Oh, absolutely.
Historically, entering the crypto space required capital you were willing to lose. You were essentially forced to play a high-risk spectator sport.
Right, you stake your liquidity, you wait, and you just hope the macroeconomic winds blow in your favor. Okay, let's unpack this, because the documentation frames this macro picture in a way that feels very different from traditional DeFi protocols.
It really does.
For years, the default strategy for the average person has been what Normie Crypto literally calls the buy and hope strategy. Earning yield in traditional crypto is basically like trying to board a moving train or, throwing darts blindfolded. That's a great way to put it. You have to time the jump perfectly, have the upfront capital to buy the ticket, or you just get crushed. So how is the meme-linked architecture structurally any different?
Well, it comes down to shifting the mechanism of yield. Decentralized finance is moving past the speculative buzzword phase and into an industrial era where these ledgers form the actual routing layer of the internet.
Okay.
Normie Crypto is trying to pivot the user from being a passive liquidity provider to an active network builder. They are equipping members with a specialized suite of tools designed to leverage information asymmetry.
Like the analytics they mentioned.
Exactly. For instance, their network building analytics aren't just a generic price feed. They're designed to parse on-chain momentum shifts way before they hit the retail news cycle.
Because we all know that once a token's volume spike is being reported on mainstream financial blogs.
The smart money has already exited.
Yeah.
You're too late. Exactly. If you are relying on traditional media for crypto insights, you are consuming a lagging indicator. On-chain network growth is a leading indicator.
Which makes sense.
Right. So if you have analytics that visualize wallet creation and contract interaction early, you have a distinct mechanical advantage.
But having raw data isn't enough, right? Like, I can look at a scanner and just see a wall of numbers. It has to be legible.
And that is why they focus so heavily on simplified onboarding. They're actively stripping away the cognitive load.
Thank goodness.
For anyone who has ever tried to bridge assets across networks, figure out gas fees, and execute a cross-chain swap just to interact with a new decentralized app, it is incredibly daunting.
It's a massive point of failure for adoption. I've definitely abandoned transactions simply because the bridging process required like 4 different video tutorials.
Right. So by clarifying those actionable insights and removing the technical jargon, they are lowering the friction.
But there is also a psychological component here, isn't there? The framework heavily prioritizes diamond hand strategies over the frantic day trading mindset.
It does. And while the concept of holding through volatility isn't new, Normie Crypto seems to be baking this long-term compounding philosophy directly into their community support structure.
Which is smart because human psychology is undeniably our own worst enemy in highly volatile 247
Oh,
market.
no, without a doubt. A community architecture that actively anchors users against panic selling is a tangible asset.
But the truly innovative mechanism here isn't just about holding an asset. It's about how you acquire and compound it in the first place, right?
Yes. This brings us to the core engine of their proposed digital-first economy.
Okay, I want to challenge the premise here for a second.
Hmm.
We understand the theory of active participation, but how does someone actually execute on this without just deploying more
All
capital?
right.
If I don't have, say, $10,000 to stake, how am I participating?
What's fascinating here is that this is the real aha moment in the blueprint. They explicitly state that in this new economy, attention is the definitive currency.
Attention.
Yes. The transition they are pushing is a move from capital-based yield to labor and attention-based yield.
Okay, so sweat equity, basically.
Exactly.
Hmm.
If you want to grow a digital footprint rapidly, you capitalize on human attention and network effects through a structured referral network. You use your existing social graph as your starting capital.
Right. So I'm looking at this MemeLinked referral program, and honestly, my immediate reaction is a little bit of skepticism.
That's fair.
I mean, affiliate links are kind of the white noise of the internet. Every software service, every newsletter, every exchange has a referral program.
They do.
If I take a standard affiliate link and drop it in a group chat or put it in a social media bio, it is universally ignored. It's totally invisible.
Yeah, conversion is near zero.
So I really need to understand the underlying mechanism here. How is the MK Tokens referral program functionally any different from the thousands of Web2 affiliate links we ignore every single day?
That is the exact bottleneck the architecture is designed to solve. Most Web2 referral programs fail the average user because of a fundamental misalignment in both support and technology.
How so?
Well, on the support side, you are usually handed a bare link and left to fend for yourself. Normie Crypto's blueprint actually provides the marketing assets, the educational funnels, and the technical scaffolding required to convert a casual click into an active participant.
So they are providing the entire funnel, not just the front door.
Yes, but the technological difference is far more important. Think about traditional Web2 affiliate links. They rely on 30-day browser cookies.
Right.
Those cookies get wiped, they get blocked by privacy browsers, and the attribution is incredibly fragile.
Hmm.
You might drive traffic that converts a week later, but because the cookie cleared, you earn absolutely nothing.
Which is incredibly frustrating.
But the MK MemeLinked referral program operates on blockchain infrastructure. This means the attribution isn't a fragile cookie. It is hard-coded into the smart contract.
Wait, really? That makes a massive difference.
It changes everything.
If the referral is mapped on-chain, it is immutable.
Exactly. When someone you onboard transacts, the protocol itself routes the 4% reward directly to your wallet.
4%, that's substantial.
It is. And there is no middleman auditing the cookies at the end of the month. It is instant cryptographic attribution.
Wow.
And in an industry where global liquidity moves at the speed of light, locking in a hard-coded 4% kickback on a growing network is a highly aggressive incentive structure.
And we really need to highlight the accessibility of this because it flips the traditional decentralized finance model completely on its head. The literature emphasizes that anyone globally, and this is a huge U.S. opportunity too, can access this MK opportunity with absolutely zero initial investment.
None at all.
No upfront capital. You aren't locking up your own liquidity. You are leveraging your ability to capture and direct attention toward the MemeLinked ecosystem.
Right. It is framed as a potential side hustle or even a primary digital income stream that snowballs as the people you bring in begin utilizing the network.
Which totally democratizes the entry point. You don't need to be an accredited investor or have a background in algorithmic trading.
Not at all. Your social reach and your ability to educate others literally becomes your stake in the protocol.
But you know, that introduces another major logistical hurdle. Earning a 4% on-chain reward sounds flawless in a white paper, but managing a distributed network of referrals usually feels like flying blind.
It's a nightmare usually.
Right, if you have a global network interacting with a protocol, you need to know exactly what is converting, who is active, and where your attention is best spent. So how do they solve the attribution visibility problem?
They tackle this through a custom interface they call the normie tool.
The normie tool. Okay.
Yeah. Think about the historical problem with affiliate dashboards. They give you, at best, a highly aggregated, delayed spreadsheet.
Right, you get an email on the 15th of the next month.
Exactly. You cannot optimize a digital strategy if your feedback loop is delayed by 30 days and lacks granular data.
Here's where it gets really interesting, going back to that earlier metaphor. If the traditional crypto model is jumping on a moving train, the meme-linked model is like laying the tracks.
I like that.
You are earning a small toll, that 4% for every interaction that happens on the infrastructure you helped build. But to be an effective builder, you need an absolute bird's eye view of the railway.
And that is exactly what the normie tool is engineered to provide. It acts as a professional-grade command center. And the documentation notes that significant version 2 updates are actively rolling out for this dashboard.
Yeah, I am looking at the feature set for this V2 update, and the focus on latency, or rather the lack of it, is striking.
It's instantaneous.
They're offering direct online tracking, meaning you can monitor your referrals and track your 4% MK earnings in real time.
Because the attribution is happening on-chain, the dashboard just reads the ledger.
So you aren't waiting for an accounting department to finalize a report. You have granular, instantaneous control over your affiliate data.
The psychological impact of a real-time feedback loop really cannot be overstated.
Oh, for sure.
When you can literally watch that 4% compounding happen live as your network interacts with the protocol, it fundamentally alters user behavior. It immediately validates the effort of network building.
And true to their name, the normie tool takes all of that complex on-chain data and runs it through simplified visualization. It translates raw blockchain interactions into a clean, actionable UI.
Which is so necessary.
It gives you the immediate data required to actively optimize your strategy, basically turning a casual networking effort into a rigorously managed digital asset.
It levels the playing field by giving retail users the kind of analytics usually reserved for institutional liquidity providers.
Wow.
However, we have to look at this critically. A state-of-the-art dashboard is utterly useless if it is tracking a ghost town.
Very true.
You can have the most seamless, hard-coded 4% referral mechanism in the world. But if the underlying product lacks real-world utility, 4% of nothing is still nothing.
Which is the perfect pivot. What is the actual gravity pulling people into MemeLinked? Why would a mainstream user want to interact with this ecosystem in the first place?
This is the big catalyst.
Right, because the roadmap detailed in these materials drops a massive update. MemeLinked is building a fully blockchain-powered social media platform.
Yes.
And they aren't just launching like a clunky desktop web interface. They are targeting late July 2026 for an official mobile app launch on both the Apple App Store and Android.
From a structural perspective, a mobile app launch on the major centralized app stores is a critical inflection point for any decentralized project.
Huge.
It is the ultimate bridge between the friction-heavy world of Web3 and the frictionless expectations of the everyday consumer.
Definitely.
Going native mobile instantly increases a protocol's accessibility and potential user base by orders of magnitude.
It puts the ecosystem right next to their banking app and their traditional social media feeds. But it is not just a decentralized clone of existing platforms, is it?
No. The documentation introduces a feature called Moon AI.
Moon AI.
Yes. They describe this as an AI agent stepping into the spotlight to revolutionize how users interact with both money and technology within the MemeLinked ecosystem.
Okay, weaving an artificial intelligence layer directly into the fabric of a blockchain social network is a very compelling architecture.
It's incredibly ambitious.
While the granular technical specifics of Moon AI are still rolling out, the utility of an AI agent in this context is pretty clear. It can act as a financial and social co-pilot.
Exactly. It could personalize the user experience, optimize the network building analytics we discussed earlier by suggesting where your attention yields the highest return.
Oh, wow.
And it could even streamline the actual execution of MK token transactions.
Basically abstracting away the blockchain layer entirely. If the AI is handling the complex routing, the user just experiences a seamless social and financial application.
That's the holy grail of mass adoption.
Now, there is an assertion in this source material that we really have to examine because it makes a very aggressive market
I
claim.
know exactly what you're going to say.
They argue that the MK token has the structural potential to deliver higher multiples than established blue chip networks like Bitcoin, Ethereum, or Solana.
Right.
At first glance, claiming you can outpace half-trillion-dollar networks sounds like pure marketing hyperbole. What is the actual mathematical justification for that?
If we connect this to the bigger picture, it is entirely a function of market capitalization and the physics of liquidity.
Okay, how so?
Well, Bitcoin, Ethereum, and Solana are foundational networks, but because of their massive success, they have matured into institutional-grade assets.
Yeah, their market caps are in the hundreds of billions, or even over $1 trillion.
Exactly. For an asset of that size to merely double in price to achieve a 2x multiple, it requires an astronomical, unprecedented influx of fresh capital.
You're talking about moving oceans of liquidity just to move the needle a few percentage points.
Precisely. But MemeLinked and the MK token are currently in their early scaling phase. They are not burdened by a monolithic market cap.
Ah, I see.
Therefore, it requires exponentially less capital inflow to generate significant percentage returns. In the mathematics of decentralized networks, the asymmetric upside is structurally reserved for the pioneers who enter and build during the foundational stage before the mass liquidity arrives.
So, putting all of these pieces together, what is the actionable takeaway for someone listening to this right now? The literature is explicitly pointing to a rare structural window of opportunity.
It really is.
If you have been sitting on the sidelines watching the digital asset space mature, feeling like the barrier to entry has gotten too high, the MemeLinked ecosystem is positioning itself as the pivot point.
It is a deliberate shift from observing a mature asset to actively scaling a nascent one.
And the crucial difference is how you interact with it. You aren't being asked to blindly risk your hard-earned capital on a speculative chart.
No, you are being offered a framework to leverage your network and your attention.
And that 4% MK referral opportunity is live globally, utilizing the smart contract attribution of the Normie tool. And it is all leading up to this massive social media and mobile app catalyst in July 2026.
The transition to a borderless, digital-first economy isn't a future hypothetical. It is the current reality. The infrastructure is being laid right now.
Exactly. And the most immediate call to action derived from this entire stack of research is simply to explore the architecture for yourself. The documentation pushes heavily toward their portal at normecrypto.com.
Which is the best place to start.
And we have to be crystal clear about the mechanics of this. Registering comes with absolutely zero commitments.
Usuro.
There is zero money down required. It is fundamentally a risk-free exploration layer. You can poke around the dashboard, access the blueprint, and determine on your own terms if transitioning your social capital into a digital asset is the right move for you. So go to normecrypto.com, register, and evaluate the tools firsthand.
As we wrap this up, there is a broader philosophical implication to this architecture that I just haven't been able to stop thinking about.
Ooh, what's that?
The entire normie crypto model rests on the thesis that in the modern economy, human attention is the ultimate currency.
Which is true. It is the bedrock of the entire internet. Everything we do online is monetized by someone.
Exactly. So consider the mechanics of your daily life. Aren't we all already working for traditional Web 2 social media monopolies every single day?
Yeah, we are.
Every time you scroll a feed, every time you share a post, every time you invite a friend to join a platform, you are actively generating billions in market cap for those networks.
And giving them our attention currency.
You are building their ecosystem. You just aren't getting paid a 4% algorithmic kickback for your labor.
Wow. That's a sobering thought.
It is. So the question you have to ask yourself isn't just about adopting new token, it's this. What would happen to your financial trajectory if you simply stopped giving your most valuable asset away for free and started demanding a hard-coded cut for your attention?